I'm standing next to the last remnants of the Berlin Wall, which divided Germany and Europe during the Cold War until 1989. Berlin is now one of Germany's property hotspots, a fashionable start-up hub where apartment and commercial property prices have been rising in fast gentrifying areas, particularly in the old communist east of the city, as international investors look for healthy yields. But a further division is raising its head today as rents are pricing out local families. Is there a new great divide between profit and society, or can the two be somehow reconciled? We also ask, what kind of role can German property, bricks and mortar, play in investment portfolios? Join me as we shine our spotlight on German real estate. So what are the demographic, the economic, the business trends which favour investment into German real estate? We've come to speak to the Chief Financial Officer of the Consus Group, Benjamin Lee, to further discuss these issues. What are the key demographic trends which are making German real estate a particularly attractive investment?
For a long while, the demographics were pretty neutral, even slightly negative, and in the last approximately 5 years they've turned around. And there's two things that are driving that primarily. One is the increase in household formation, but that is also aligned with two other trends. One is urbanization. With the new economy, there's a lot of movement into Germany's top 9 cities, which is driving demand there. And then, of course, there is the significant boost from immigration as well. The second part of that is that where our focus, Consus's focus, is middle income, which is where there's the biggest shortfall. In terms of underlying structural demand, if you think about business broadly, London was a huge magnet. That obviously, that light is turned down. Berlin is now the natural capital of Europe politically. Frankfurt will have a much stronger role economically. Both of these cities traditionally had a relatively small share size compared to London, and therefore there's a reasonably small increase in demand will have a big percentage increase in terms of absolute numbers. The second thing is in terms of investment. So the UK, London in particular, was always a natural hub for real estate investment. There's a bit of a question mark now over the London economics, and therefore the natural strongest economy to go for and invest in real estate is Germany. So we think both of those factors will be driving investment in Germany.
Real estate developers are often very much in the spotlight because you have such a transformative power on cities, on economies. Do you prefer to invest in isolated developments or actually transform whole neighbourhoods?
Yes, we do like to focus on larger quarters because we think they play to our strengths, and there's 3 reasons for that. One is we have the scale to invest in the larger quarters, which a lot of parties don't. A typical developer might be investing on the small corner plot and their competition is fierce. But for these much larger developments, there's much less competition, number one. Number two, because of the scale of them, you're able to get better margins and achieve the economies of scale that we have as a large developer because you have a large plot, you can spread those costs. And thirdly, we have the expertise to do a combination of retail, residential and commercial. Local authorities want mixed use and we can provide that. Our model is a forward sale model. So what we do is we buy plots of land, we get planning permission, we get rezoning. Prior to construction, we then forward sell those to investors, and those investors then fund the construction and take the profit at the end. So it's a very efficient model from a financing perspective. What investors do we have currently? They are basically German or European. So we have German pension funds, German life insurance companies, UK pension funds, UK life insurance funds. So Swiss Life, BNP, Aberdeen, Standard, very strong institutions, all European based. So I think from their perspective, what they're focused on is a yielding asset in Germany's top 9 cities, which is a hugely attractive thing to do because with interest rates where they are, if you have a yielding asset at 3 to 4% with obviously inflation linked because of the rental, that's a great asset to have, and that's what drives them.